The operation of investment funds involves several key stakeholders, each with distinct roles and responsibilities. Understanding these roles is essential for ensuring the smooth functioning of a fund. Fund managers are responsible for making investment decisions and managing the fund's portfolio. Their primary duties include developing and implementing the fund's investment strategy to achieve its objectives, selecting and managing the fund's assets, including buying and selling securities, identifying, measuring, and mitigating risks associated with the fund's investments, providing regular reports to investors and regulators on the fund's performance and risk exposure. Depositories play a crucial role in safeguarding the fund's assets and ensuring compliance with regulatory requirements. Their responsibilities include holding and safeguarding the fund's assets, including securities and cash, monitoring the fund's cash flows to ensure that transactions are executed correctly, verifying that the fund complies with regulatory requirements, such as diversification and leverage limits, acting as a watchdog to protect investors' interests and ensure the fund operates transparently. Fund administrators handle the operational and administrative tasks of the fund, allowing the fund manager to focus on investment decisions. Their duties include calculating the fund's net asset value, NAV, on a regular basis, preparing financial statements and regulatory reports, handling investor subscriptions, redemptions, and communications, assisting with compliance requirements, such as tax reporting and regulatory filings. Passporting is a key feature of the EU's regulatory framework, allowing investment funds to be marketed across member states without needing separate authorization in each country. This mechanism is particularly important for USITS and AIFs under the AIFMD. USITS funds authorized in one EU member state can be marketed to retail investors in all other EU countries under the USITS directive. The fund manager must notify the regulator in the host member state of its intention to market the fund, providing the necessary documentation, for example, prospectus, KID. Passporting enables USITS funds to access a larger investor base, reduce administrative costs, and benefit from the USITS brand's recognition and trust. AIFMs managing AIFs can market their funds to professional investors across the EU under the AIFMD. Similar to USITS, the AIFM must notify the regulator in the host member state and provide the required documentation. Unlike USITS, AIFMD passporting is limited to professional investors, and some non-EU AIFs may face additional regulatory hurdles. Funds domiciled outside the EU, for example in the US or Switzerland, can also benefit from passporting under certain conditions, such as compliance with EU regulatory standards. In the absence of passporting rights, non-EU funds may rely on national private placement regimes to market their funds in individual EU member states, subject to local regulations. Thank you for watching.